morning, everyone, and welcome to the European crossover. And good morning to Dotto. He says, nice music to start today, and hope you have, or wish you have a great one. So you too. And, we're going to get ready to start with non-farm, and we'll just go in and cover everything. If anybody missed anything and wasn't here at the beginning of the show, please don't ask for questions later on, because I'm not going to be going back to cover stuff if you weren't here at the beginning of the webinar. It's a free webinar, so if you can't make it, that's fine. I'm not going to ask anybody to come to the webinar, but don't come popping up in the last 15 minutes and tell me to go over stuff that everybody that showed up early were here to go in and cover. Not going to play that game. So let's go and take a look at, obviously, what's the big thing is going to be the non-farm payroll report. So we'll move on, and we'll not move on, but we're going to take a look at the components of the report. How that's going to go in and play out, what our strategy is for that. I mean, obviously, we've had such a big move in the, in the dollar, per se, specifically the euro, but then again, dollar yen has really pulled back pretty far too. So we'll go in and take a look at that, and then we'll focus closely on the moves that we've had in crude oil. If you're trading crude oil, there's been just a lot of volatility, but good volatility from a trading perspective. I tweeted out I was looking for between 31.42 and 31.48. Tweeted that early yesterday. After I was looking at 33.57 because I was kind of implying that this was a shake and bake fake to the upside, and pointed out, hey, for long should be exiting right here at 33.40. Had a level at 33.57. Thought it was kind of like not going to really be there. And we did make it up to 57. Thought that was a great short. It came down, and I tweeted out later I was looking for 31.42 to 48. We got to the pip, 31.42. We rallied basically up $1 from that level. So we'll take a look also the breakdown of crude, kind of break this stuff down, give a closer look. So that's the edge that we're going to be going, or direction we'll be going in this morning. So like I said, anybody shows up late saying, hey, can you look at this? Sorry, buddy, if you weren't here, too bad, too sad, as my dad used to say. So anyway, so let's go on and move into the economic reports. And so obviously we've got, some other news across, from Europe. That's not really going to count on daylight today. Everything's about the granddaddy report, the non-farm payroll. So let's go and take a look, see how this bad boy is looking. The prior one, remember, was a real true blowout number. I think, I don't even know if this is showing on my screen. Let me make sure. Because when I'm looking on my iPad, it's not showing the report. Let's take a look at something real quick. Make sure that y'all are seeing that. I don't know why it's not showing there. And are y'all seeing the report estimates? If anyone can cue me and see if they're seeing that. Because on my, okay, I see it now. Okay, great, okay. I was seeing it, but it looked like it wasn't being broadcast. Okay, so anyway, here we are. And, last month we got 292, a real big blowout number. And they're estimating this month to be 190. I think it's going to probably surprise a little bit. I don't think it's going to be like surprising to the big upside, but I don't think it's going to be that weak. I think it's going to be something like maybe like 220, 222 or something like that. So I think you're probably more likely to see, a bit of an upside surprise as compared to, 190. That would be my thinking. I don't really pay, I've told you before, I really don't pay attention to private payrolls, and let's see, and manufacturing last month lost 2,000. Obviously, if we were to see, which wouldn't seem likely that we'd see a jump in manufacturing. Obviously, if let's say the number comes in at like at 220, which is a bit of a surprise to the upside, but let's say we lost like 10,000 manufacturing jobs, then that's going to offset that. I mean, intraday, you'll be looking at those numbers and see how it hits and how it would want to pull back. Government payrolls, that's not going to really make any difference. Only where it's going to make a difference was, let's say, if we get 215, which is mildly better, but of the 215, 28,000 was government payroll jobs. And that, once again, that's not showing any strength in the economy. It's just, basically the benefit of those. So once again, it would be downplayed again, showing its dollar weakness. So Unemployment's right to 5%. My guess is stay at 5%. It might even tick down to 4.9%. I wouldn't be surprised if we do tick on down to 4.9%. So that might be a little bit of an upside surprise. So we're probably going to see a lot of good volatility. It's going to be swinging around like a monkey on a swing at the circus. But and average hourly earnings, I would think that this will pretty much stay in line. It might even dip to 0.2, but we're still seeing that steady progression. This has the opportunity. There's no way I don't think it jumps up to 0.4. That I don't see. But if it comes up to 0.3, once again, that's going to be considered. We're seeing that strength coming across, which would still, some people were looking for the Fed. Now, like I said, all the idiots who said the Fed was going to raise to 4 times, now some of those sorry a-holes now flip to the other side and now say, oh, the Fed made a mistake. Well, if we get another solid 0.3, then that probably, implies or will weigh into, hey, there's at least one more hike coming. So keep an eye on that. Average hour work week. I don't think this is going to impact it much. From an ancillary standpoint, it kind of does. If we tick up to 34.8, and let's say we get 225, and also we see this hold at 0.3, then that gives that implication of between 1 and 2 rate hikes. So that would, weigh on the euro and show more dollar strength. That's the way to look at it. Canadian, I'm not really paying attention to this. But we can. For me, I'm just looking at the NFP. Like I said, when you got 2 of these going at the same time, the market's going to be going all over the place. So unless you're trading dollar CAD, and there's nothing wrong with trading the dollar CAD. It's been an awesome market as far as volatility, but the NFP is going to carry more weight unless we see a big surprise number in Canadian employment. And last month was nearly 23,000. They're looking for 5.5. Obviously, if we got closer to like 10, that would certainly be, beneficial for the Canadian dollar per se. Unemployment rates is 7.1, held steady at 7.1. Obviously, you wouldn't necessarily expect to be a tick down in what's been happening in crude, but obviously something like that would certainly be supportive. But we're not really weighing so much on that. We've got the full-time employment, which this has been a real big impactor as of recent. The thing between full-time employment and part-time employment. About 4 months ago, we had a huge jump to the upside, but then full-time employment had gone down, and the bulk of the move was almost all part-time employment, which obviously was beneficial for the Canadian dollar. But then when they saw that the bulk of that was part-time employment to the at the expense, as they're trying to say, the expense of full-time employment, then that really, ultimately ended up weighing against the Canadian dollar. That was like about 4 months ago or something. So if you're trading dollar CAD, you'd want to play very close attention between the full-time employment and the part-time employment. So let's take a look. Now we got Canadian IV PMI later on at 10 a.m. Eastern. And that's it here. So the big shebang is going to be obviously at 8:30 Eastern time, and then we don't really have anything else to play off of, like University of Michigan or anything like that. So this is just going to be, where the big play is. The dollar in the doldrums head for the worst week since 2000. This is all bullshit. It's just, in the sense that it really doesn't make any difference. I already talked about that. When you look, all they're doing is repricing the assets from where, like I said, when you look at it from the bigger overall picture, the sustained move from in the euro, talking specifically, obviously we had moves in the dollar and dollar CAD. But if you look at it from the bigger picture, the sustained move from 115 to 105 was a diverging policy, which it still is, but that it looked like the Fed would keep on going. And that's why the dollar strengthened so hard. I mean, the euro popped back up, but then we once again came back lower. And then it's kind of been fighting that off. After the Fed took their action, then everybody was concerned with the impact was, and now potentially the Fed can only hike maybe one more time. So all they did was, like we talked about that for a while, all you're doing is repricing the dollar and other assets. And obviously, the U.S. stock market, there's nothing wrong with the U.S. economy. It's everything that's going on in the rest of the freaking globe. That's why the S&Ps had to come back down, because in relation to everything else, they had to be repriced. If you look at it in that vein, then you don't get lost like all these losers that don't even know what the F or don't know their head from their ass. So, like I said, don't get so wrapped up in these headlines. They're, the headline here is really just reflects of where we're at now. It doesn't say, if this headline were to come in, 2 weeks ago saying, hey, we're probably going here, that means something. So all these headlines are just basically telling you what just happened. That's not going to make you any money. You see what I'm saying? And this just reflects of where we are now in the dollar. It doesn't tell you how we got there or why we got there. And the reason why we got there is because then with the rest of the globe in the crapper, then that, and after we'd already raised and the market had prices in for the last couple of months of 2015, and I'm saying more so, it wasn't like as if the dollar wasn't running before then, but the degree was, hey, look, the Fed's going to be hiking, this could be a big play. Remember Goldman Sachs, we're going to 90-some cents, and we're going to go to 80-some cents. And look at here's the euro's right back up here again. So I'm saying is, you just look at it in that sense, like we were talking a few days ago. They're going to have to reprice the assets. And I even said when I talked to Blake, and you remember on Tuesday morning I said, and I didn't think the move would happen until NFP, but when we got this week service PMIs and Dudley came out with his dovish comments, then that got everything kicking early. But I said, hey, the thought is going to be, watch, the euro looks like it's going to pop, the dollar's going to take a pretty good whack. And the thinking is going to be that the Fed can't do any action. And that's exactly what happened. It doesn't take like a freaking rocket scientist to figure out how that wanted to go and play out and what the narrative was going to be on that. So let's go on and move into the charts, and we'll take a look at the euro. So let's take a look at where we're at right now. So let's go on and move into the 2 hour. And so, this is the stress this a little bit more so it makes it easier for people to see. So this is this wedge or triangle, whatever the hell you want to call it, that I drew back on Tuesday, and I discussed with Blake, and I was looking for a big move in the euro. And let's see, John says, when we've seen such as the 300 pips we've seen in the euro dollars, does that always indicate we're in our new trading range, i.e. it's unlikely we get a quick reversal? Thanks. Well, I mean, you can't not get into a new range if you move 300 pips. I mean, I understand your question. That's a good question. You're right about the reversal thing, but technically speaking, on any pullbacks, look at it this way. Forget being a bull. Let's say that you were a bear, and we know some people shorted. You're looking to cover on any moves back here. And I'm going to tell you right now, 1070 is also going to be the 38% retracement of this I think it's from the move from here, right in here. I did it on the 30-minute, but we'll look at it. But the script is flipped because, like I told you, although I didn't think it was going to happen to NFP day, but a funny thing happened on the way to the Palladium, which is, Dudley got going, and that really opened up the floodgates. But it wasn't as if the market wasn't waiting for that. It just happened sooner than what people expected. But we have moved. We've moved. That's the whole thing that I was talking about since Tuesday. You've got this huge consolidation move here. Right in there, it's consolidating. And it was waiting to break out. And it was unlikely that it was going to break out lower in light of what was happening with dollar yen and dollar CAD, and why, just so that we're all on the same page, we're telling you they were the canary in the coal mine. Because you remember last Friday we made it to this rally, and I said I was looking, remember, I came in, I was telling Blake, because it's good to think in perspective. I was, remember the BOJ that came out, and we had this rally. And I came in on Friday, I think people were thinking I was talking a lot of smack or a lot of noise, but I was saying, hey, you're a freaking idiot if you are trying to sell the euro in here now. That's what I was saying. I go, anyone that's putting on new positions, and I'm talking in the morning, I go, and we were trading at the time at 20.92. I go, you're a freaking idiot if you're putting these trades on now. And I go, because anybody that came in, and if we come back over here, I go, you see how the market, no one expected them to go on and pull on that negative rate stuff. So when we pull back in here, and this will kind of explain the whole picture. On this pullback, people were more than happy to cover. Anybody that played it from the bear side, and they sold in here, or if they're lucky enough on here, they were buying down here. Because if everybody was so bearish, then why the hell didn't we go down back here? People realized, oh my goodness, that flips the script. If they're talking about negative rates now. So these people were more than happy to go and buy. And so when we came in the morning, if you remember correctly, on Friday, we were trading right there. And we weren't on this bar, we were on this bar at the time. Right? That bar. I think it's right in this right here. And I go, you're a freaking idiot. You're a freaking idiot if you were putting on short positions right now. I go, because this flipped the script. I don't think I used the phrase flip the script, but it did. I go, of anybody that played the short side were quick to cover on the return boot back. And they're not really going to go on and get short now. They'll probably wait till Monday. And I said, they're dithering around here, because remember, they can only pull back. We're trading in a very tight range at the time, 2062, 2100. And I go, they're going to go on and wait till Monday. And at that point, that will allow the market over the weekend to move up into this area. And this is where I think you're going to see your first pushback and where you want to go on and take on your short positions. Well, they didn't wait till Monday. They actually took them up here on Friday, and when I came on with Blake, I said, this is the area where you want to look to short it, between 2168 to 2192. So we got that, and the market pulled back about, what, 70 pips. And we reasserted ourselves, so we came in Monday morning, I'm thinking, well, they're going to go to 2192. And if you remember, the SPOOs went to 1940. And I said, there's a problem here. On Tuesday, I told Blake, the SPOOs went to 1940, and the dollar yen couldn't even, forget 2192, forget 22 and 2214, which I thought was going to be a very good area to short. They couldn't even take out Friday's highs. I go, something's wrong. So that was your canary in the coal mine, saying, wait a minute, something's going on here. And that's why when I came in on Tuesday, I discussed with Blake, I'm looking potentially for the euro to really make a big move. And I was referencing the dollar yen as a canary in the coal mine. Now, if you remember also, putting all this in perspective, we came in on Monday, and Friday, crude took a lot of people's heads off. And so crude turns around and starts giving back its gains in good force. Remember, we were looking for a lower price in crude, and it went even more than what I had even expected. We were trading at, I think we're trading at 33.20 something, I think it was. And I was looking for, initially, I moved to 33.71. Then I was looking for the market to eventually go to 33.37, and then we could, pop back up. Didn't say we're going to go like way, way up, but we're going to be able to bounce there. And we kept on we got there, went to 33.71, we popped up, then we eventually went to 33.37, and it just held there. And then it just started falling apart. But in the meantime, the dollar CAD wasn't really doing anything. It mildly responded, but it wasn't. Here's crude falling apart, so the dollar CAD should have at least made it back up to here, while crude was falling apart. And all dollar CAD would do was a feeble rally. And then we start falling apart. So once again, dollar yen and dollar CAD were your canaries in the coal mine. Thus why I came in on Tuesday and was saying, hey, I think we're going to get a big move in euro. So now back to euro. So we talked about this and said, hey, we're going to get this big move in euro. The script has flipped, because now the concern is the Fed can't do anything. Then you're seeing these losers. The Fed made a mistake. They should never have raised. If the Fed never raised, they lost a ton of credibility. And it's not only that, but like people say, we have a lot of debt. You have to manage that debt, and you want to lose that credibility because you want the market to still believe you're going to do what you need to do. And when you say you want to do something, whatever they would do, the market's going to go respect that. The market's not going to respect the S&B, and the market doesn't really. And the market's quickly losing respect for the BOE. But with the balance sheet that the Fed has, the last thing you need to have happen is to lose credibility. Whether people want to make fun of it, and some of y'all might want to say they have no credibility, the credibility I'm talking about is where the market will respect. If the Fed were to take some type of action, the market will come in and respect that, and the Fed will be able to sway the market. If you lose that credibility, that's what I'm talking about. It's not a matter of honor or something like that. It's whether the market will continue to respect the steps or actions that you end up taking now or in the future. So now the thought is the Fed can't do anything, and that's what I was saying is it wasn't so much people. That's what I was saying when I was talking to Blake. I think people might have misread some other stuff too. Is I was saying, yeah, people are going to be talking a lot of smack. The euro's this, the euro's that. It's not that. They needed to reprice the assets because the move from 115, and I've already mentioned this, so we're all on the same page. The move from here to here was predicated, not that we didn't already have a diverging policy, but the move here was predicated that not only was it a diverging policy, it would continue to gain in force. Now, obviously, the market, which really had nothing to do with the Fed, it just exacerbated it eventually. The overall weakness that we saw in the globe, in the global economy, kind of up into this what we would call it an argument or story that the Fed would be raising, which was ridiculous at the time, 4 times this year. I thought potentially there would, potentially. I believe that there would be 2, and maybe there'd be 3, but I think really it was more between 2, maybe 3, and people that were going up to 4 were just simple idiots like they all are. So what they had to do ultimately is when we got into here, when the market was still trying to figure out what to do, we got this consolidation. And so the canary in the coal mine, like I told you on Monday, and prior to Monday, but Monday was a real telling tale, was when the SPOOs rallied to 1940, dollar yen couldn't take out its most recent high on Friday, much less make it to 122. And when crude oil sold off, the dollar CAD had a rather feeble rally when it should have gone and rallied up at least another 150, almost 200 pips. That was telling you something. So we had the setup here. So when you can, here's a key thing you have to know. When you can match a fundamental story to a technical move, then you really got something there. That's what we talked about. Eventually, this thing could make it up to 115. But I think in the short run, and I've already done this work here, is that I think this pretty much is our measured move here. The way I do it, y'all might have different ways. I'm just telling you the way I do it. It works for me. Y'all do it however you want. I really don't care. I literally don't follow anybody else's work. I only follow my own work when it comes to trading. I don't follow anybody. There'll be other people I will listen to and respect their opinion, like Blake, but when it comes to my own trading, I don't follow anyone, and I mean anyone. So I think that we're going to, it looks like we'll make it up. This measurement takes it to 1283. Doesn't mean that you bet the farm based on that one move, target, or, because what I've done is I already showed y'all, for those who might have missed it, I took this high to this low, and the breakout, and boom. Now you might say, wow, the way you did it is wrong. It should be, I don't give a rat's, what. I trade the way I trade, and the success I have tells me I'm doing it the right way, the way I do it. Whether y'all think it's right or wrong, I really don't care. I trade the way I trade. But, so when I look for confluence, I say, wow, 1281 is the 78% of 517 to the high back here of 1496, this move, you see? That's 78%. And I say 1255 is a move from 517 to 1713. That day when the wheels were coming off the caboose in China. So this tells me that I think for the market could run out of gas here, because I think the move's been so far. Now, potentially, if the number we come in with a weaker, not horrible. If it was horrible, then all the bets are off. But if it just comes in slightly weaker, there's enough oomph to take us up here. And we could maybe even, I doubt it, but we could maybe even close up in here. But I think that by Monday, could even be later today, that this is going to be a resting area. And I don't know where the market's going to go right now, but eventually then I would think that we could go down once again here to this 1070. And then we'll probably see a bounce. Motherfucker. Let's just move that damn thing. We'll take us up to here. Then maybe only to here, and then we take off again or whatever. We'll have to see how that plays out. I'm just throwing out little scenarios, and all I do is I just try and move in between the scenarios, depending on how the market reacts. I'm not trying to forecast. Like I said, I already said that. Forecasting is for losers. Okay? I mean, I don't see, someone shared a chart with me, his opinion goes to 120. I don't care. That doesn't make me any money if I tell them everybody's going to 120. I don't give a rat's what about that. I'm just making my money here and saying on Monday when nobody else was saying it that I look, well, I think Michael Houston, he had mentioned he was talking about a potential move. I didn't hear anybody else talking about it on Tuesday. So I think that we'll probably, we have the oomph to take us here. Now, obviously, if we see something, here's where all the bets are off. If we see something like 65,000, forget about it. Forget about it. There's just like, you know what? Now you got to start looking for levels up in here. But we'll have to see the number play out, because then it would say, oh my God, if we saw something like 65,000, I don't see that at all. But if we saw something like that, people would be like, no way. The Fed is absolutely not hiking. They made a mistake. Who knows? They might even have to cut back. That would open us up to go right to the 1413. So that's what I'm saying. At that point, it'd be like, whoa, they'll blow through these things right here, these targets. But for now, that's the way it looks like, because the market will have to take a rest and we'll have to pull back. So that's the way I see it. It's already time for a break. And when we get back, we'll look at the 30-minute, and then we'll move into SPOOs and crude. So thanks for joining us here on the European crossover. We'll, like I said, we'll be back shortly. Okay, everybody, welcome back to the crossover, and we'll go and take a look at here on the 30-minute with potentially an area where we'll pull back to. I mentioned the 1070. So here's the 1070, and actually should mark it up bigger on the, because you can see here the 1070 is pretty key level, and we've been held there before we ended up moving higher. Well, on the 30-minute, I guess I should just go on and stress that a little bit here. And we'll actually put in 1075 is also going to be the move of 809 to where we just went to yesterday, 1239. So you can see this is that pullback right here. So I think this is going to be a very interesting area. Obviously, we can overshoot it. 1058, remember that was that old bias pivot from way, way, way back when. I don't even think I even have it marked as a bias pivot anymore. But it was, so they can probably, come down here and dab a little bit, probably even a little bit further than this. So let me go and move this out. I want to move this, take this a step lower. And that'd be like about 1048. So I think this is where they could pull back if we see a decent okay number. I don't think it's going to be really weak. I mean, I would think it's something like around 225, 228, where the concern is going to be like, hey, there's still steady, solid growth. And, we couldn't see the euro really start to pull back and give some of these gains back. Because if we do get something like 228, 233, and it's not all based on, government payroll growth and let's say the manufacturing jobs didn't get whacked, then I think that that's going to be huge. And that could really weigh on the euro. Now, obviously, like I said, if we got something like 68,000, then all bets are off. That's what I'm saying. Now it's just a matter of how far up do they go up, and then we're looking, for levels way up here. It would blow past, this target, blow right past that. We'd be up here around the 1365 area. But that's if, like I said, that happens. So I think this is one time we discussed that early in the webinar. You really want to look at the guts of the report, and I think not necessarily on the first initial move, but I think the guts of the report will tell you if overall, once we get in the mid-session, are we starting to pull back even further, or can we just languish in here and then let the market do what it wants? I think the guts of the report will tell you a little bit of something. It'll push the narrative of the story, I believe, of what they're looking for. So we'll take a quick dab here on the dollar yen. Remember I talked about support here at 1696, and when I came back to my desk yesterday, I was like, whoa. I go, they're really dipping. I go, but I said that 1648, it's actually got this marked up on the 2-hour 47. I go, it's really a good solid support in here, and I think that will hold. So one of the things you want to keep an eye on is how the dollar yen reacts. And so if it only dips like down here and then starts to come back, that can give you a good inkling as to what could happen overall in the euro and how they're trying to look at that story. But we'll have to see how that plays out. We'll go to the dollar CAD real quick. And we talked about this area. I thought it's really a great area right in here. And I know Blake had bought it. I think he already scalped out. He said in the chat room, I think he scalped out for 60 pips or something like that. But I thought this is a great area. Right in here, I thought, like, wow, it's really overdone. we're looking in here, and it just looks great. And this, if you think about it, this is where they were breaking out at the time, if I remember correctly, because I was saying, hey, you know, and the market was trying to fight it. And we were into that key area, and then once it got past it, it was like, and I said, I go, if it gets past that level, forget it. Don't even think about trying to short this. And then it just kept on going higher and higher. So I think this is really presents a very good area here. Obviously, crude oil is going to make a big, big, big difference. So let's go and move into the SPUs and crude. So before we do that, let's go and take a look at gold. Like I said, got to give this market props. Never thought I would have made it up here. And I'm not even going to pull, I was going to pull up the gold 2-hour chart. I don't even want to be dragging over and all the screens disappear and all the other stuff. Well, we'll pull it up here in a 2-hour. We'll just make this 30-minute 2-hour chart. And I'm not going to go into the whole story again because we've done that over the course of the last few days. But we had talked about that, you know, they'd have to get above 1115, and remember this move up here. We talked about how it couldn't even make it to 1115. He quickly gave it back, and we pulled back. And just a real quick recap, and you know, I was looking for it to hold at the time of the, I think 76, I believe it was. Maybe no, it was 80. It was, and we did go on, and we actually got past the 86. We made it as low as down to $80, maybe a hair below $80. We ran up to 95. And I thought we were going to go on and break lower, although I knew there was a concern because of everything that's happening in the globe. And I thought, yeah, it's going to impact the dollar. But I still thought we would eventually work lower. But I said, if we can ever get back above 1115, that opens up the door for 1160. Well, guess what? We're now at 1160. So do what you want. I just think that now, and here's 1170, which is, damn it. This red bar shows it's a bias pivot. But obviously anything can happen because it's N&P day. My thinking is we've milked this pretty good chunk of change. And because you remember, I've been saying this, was that if we get above 1115, that opens the door for 1160. Now, like I said, I have this on the 30-minute. Obviously, it's probably, I came up with that 1160. Where the hell it came up with that 1160, I don't know. I'd have to pull on the 2-minute chart. I mean, my 2-hour chart, and I don't want to drag it over at this point. But I kept saying if we get past 1115, which I'm surprised it made it appear. Props to them. I thought we'd go lower. And the gold bugs really moved this thing up higher. So props to them. But we've made that 1160. So at this point, like I said, you know, do what you want. 1170 is huge, but I think we've had a hell of a good run. That was the marker I had. If we can get past 1115, I kept saying that opens the door for 1160. And I thought we'd pull back here to 1104. And I was only thinking we'd make it here to 1104.30. Here's that 430 I was talking about. And that would allow a move to 1115, a return move back there. And then we'd probably have to work a little bit lower before we move higher. Well, we didn't, and we kept on moving higher. But look, you think about it, look how far the dollar's going. Obviously, if we come in a lot weaker on the non-farm payroll, it's going to push gold even higher. But my thinking is if it didn't, if we don't see a bad number, I would be exiting out of my longs here for a nice short-term pullback. Probably take us back to like 32 or something like that. That's up to you. Do what you want. But like I said, that was our target all along. If it could get above 1115, I kept saying, if it gets above 1115, that opens the door to 1160. Well, we hit 1160 now, so do what you want, but I would be using this opportunity to exit. And obviously, it's a very nice breakout. I'll just use this opportunity to get out and reload on a pullback. We can look at it next week what that pullback will be, but this is kind of like, it's not the same thing, but I'm saying, you know, when we're talking about the euro, is that when it breaks out technically, with it, like me, I kept thinking gold will eventually have to go right back down. It didn't, but you cannot ignore the freaking technicals. That's what I'm saying is that you can have, like to me, I thought we were going to have to go lower. I thought we'd have to start the year and work lower. before we could eventually move higher. But obviously, because everything was happening globally, that weighed, and the dollar was the victim of that. So that was going to provide a supportive boost for gold. But I still, no way I thought it would make it up here. But from a technical standpoint, if it got above 11.15, we were saying the next target, or would open the door to 11.60. We're at 11.60, I'd be getting the frick out of Dodge. But you do what you want. But that's what we have here on the gold market, on the 30-minute. So let's go and move here on the crude oil market, because the SPUs, they've been all over the place. We talked about this zone multiple times. It's 18 and 22 and 95, 25. You see, I've got that bolded here. You can see the significance of 95, 25. I mentioned that before, on the way down, on the way up, on the way back down. Yesterday, I was even saying this is a nice place to cover. Obviously, the last time I said, hey, this is a nice place to cover, then the wheels fell off the caboose and we still went lower. I wasn't saying buy it. I said at the time, I said, hey, it's a nice place very nice place to cover, which it held. But then, like I said, we had the PMI services, and then what's his name, Dudley, and the wheels came off the caboose. And you can see we found here at the 65.25, which was already previously marked, and those that bought it, fantastic. You did a great job, and actually on the pullback, 73.25. But as we rallied all the way back up here, which really surprised a lot of people, this was yesterday. I was saying, hey, nice place to cover. We're back at our 18.95.25. So we pop back up again. It's just, it's all over the place. Not in a bad way. It's moving from these major levels or zones back and forth. So we won't spend like a whole great amount of time on the SPUs. Like I said before, I think if you follow the SPUs, you have to follow it on a very, very short-term basis. Like for now, I think, like here, I've got it marked off here on a 15-minute. I think the 15-minute, and I usually never use a 15-minute chart. But I think in the 5-minute, if you look at a 5-minute SPUs, it's just too short-term where I think you can get flip-flop back and forth. I think for me, I've used 5-minute, 10-minute, even 3-minute, 2-minute. To me, I think that the 15-minute gives you a very nice feel on the SPUs where you don't get screwed. Like you can see here, very nice graveyard doji right here. I think you can get a better feel of the market. I think on the 15-minute, I think you get jerked around so much on the 5 that you can't see the forest for the trees if you look at it on the 5-minute, which I've looked at 5-minute. And you can see things a little bit more clear and still scalp it, day trade it, using the 15-minute. But use what you want, use what works for you. So let's go in and take a look at the crude oil market. And same thing, this is like, I mentioned to someone yesterday, they were asking me, I said, hey, look, I don't even really look at the market after closes. I did look at yesterday because I was looking for a low at 31.42, between 31.42 to 31.48, and you can see here, looks like we bottomed out actually at 31.37. But anyway, pretty nice call because I was looking at from early in the morning yesterday after I had noted here, and I was telling people you need to get the hell out of Dodge, or I would lop off the longs, and I said, hey, there's a figure, a level on the 30-minute of 33.57, but that's what I said. I think this is a shake and bake. And here's my 33.57, and gave me an opportunity to get short. We dilly-dallied around, and then there was my move that I was calling for, 31.42. Actually, right in here, the 31.42, we finally hit it. Right there, you can see here. So that was a good call. 31.42 to 48. So we actually hit it to the pip. Actually, look over here. We hit it to the pip. And then we had a very nice rally back. So when we look at it overall, when we look at it on this 2-hour, obviously it's a big day today with the NFP. And obviously, if the dollar were to get whacked, that would open up the door for us to move higher. And I think that we could really spook the market because I don't think nobody would get in the way if we were to come in with a very weak NFP. I don't see that happening at all. I really think it's going to be something closer to like 227, 232. Just good growth coming across it. If I'm wrong, I'm wrong. I'm just saying that's what my feel is on it, but I'm certainly not making any bets. I have no trades on right now whatsoever. But it would open up the door. I think the market is technically set up to really rally them up. I don't think that that's going to happen. But I'm saying is I don't believe anyone will get in the way. But once again, you have to think about what happened last Friday, and we had that big rally, and a lot of people got screwed. Okay. And, this actually happened on Thursday, but we still rallied them up on Friday, and a lot of people covered the shorts thinking, oh, they're going to really move much higher. And we gave all this back. And this was, as I mentioned before, with the euro, the canary in the coal mine, because even though crude was falling apart here, dollar CAD did not even rally that much. It had a rather feeble rally, and that was already telling you something. The same way that the SPOOs rallied hard on Monday, got up to 1940, and dollar yen couldn't even take out Friday's highs, much less look at the 122. Those are the two canaries in the coal mine, which told me on Tuesday when I shared, hey, look, I'm looking for a big breakout, potentially a huge breakout in the euro, which it did culminate. It came in a little bit earlier than what I expected, but that was to the benefit, as we've already mentioned, with the PMI services and, of course, Dudley's comments. So, and really has more to do with repricing the dollar. It has nothing really to do with the dollar so bad, so terrible. Just repricing the risk, because now potentially the Fed won't be doing, which was idiotic when people were talking about 4 rate hikes. So here we are in the crude oil. Lots of times I'm just looking at how things move throughout the day and how they play out as they go from level to level. I don't try and quote unquote forecast moves. We'll have to see. Obviously, I think 33.20 is going to be huge. I think right in here. I don't know how the NFP report is going to be. I think it's going to be okay, but I think we'll see a good chunk of volatility in here. But I think 33.20, obviously on the print, when they release it, I mean, you can blow right through these numbers. But I think 33.20 is going to be key here. And I think 31.08 is also going to go and be key on here. Once again, when they release the numbers, it can be all over the place. But I do like to keep, you can see here, they, look where they rallied them back here. I mean, it doesn't seem as obvious here, but look, there's my level of my zone, 32.32. You can see where they came back up in here to meet this. And after I called for 31.48, between 31.42 to 48, we see the market come back here again, and we run out of gas right up here to the zone. Now, if you look at the 30-minute, obviously it looks somewhat more pronounced. So, see, here's my 32.32, moving into the 30-minute, and we see I've got a 32.37, but we ran out of gas right there. You can see this move back up in here, and then a very nice pullback. But as I mentioned, I don't even trade during the Asian session, and I don't trade crude during the early European session, especially on a day like today with NFP. I pretty much get the hell out of the way and just see how things size up. I haven't even updated my levels yet for my 5-minute. So I need to go and do that, but I've got lots of time to do that before NFP. That's the same. It takes me a lot of time because I drag all this stuff over here, but I'll tell you what, nobody catches turns like me, I'll tell you that. So it's a lot of trouble and a lot of hassle, but it really pays in spades. Because when you look at this stuff, then I got to figure out what this. If I already have these levels marked off, and I got a feel of where things are moving, and you can see how we made down. Remember, I was calling for 30 early in the New York session, mid-New York, early around 11 a.m. Eastern, I guess, or 10:30 a.m. Eastern. After we'd already pulled back from that 33.57, probably about an hour later or something, I was calling for a move eventually to support 31.42 to 31.48. Pretty damn good call. So let's go in and go back to Euro. Is Blake getting ready to come on? So hang on. Oh, John says, well, that's nice of John. He says, I want to thank you for the time and effort you put into providing this free service. It's making me a better and more wise trader, and I'm learning valuable lessons, so thanks again. Yeah, I appreciate that. That means a lot, to be honest with you, because you don't hear nothing on Twitter. Well, there's a couple of good people on Twitter say thanks or whatever, but yeah, I mean, be honest with you, got to give thanks to the Wise Trade, because they're the ones that put on this free webinar. And frankly, I think it's crazy as hell. I mean, they're offering these free webinars throughout the day, and you got people like Blake and Kip and the others providing awesome analysis. I think it's fantastic. What they offer. I don't know how Blake does it to give so much of his time and invaluable analysis. So it's pretty awesome. I just think there's a huge thank I go out to Trade for what they go on and provide.
Hey, Paul, how's it going?
Hey,
Good morning.
Blake, I'm going good. How you doing?
I am